Welcome back, guys, and today we're going to look at how do you actually trade gold. I see a lot of people either losing a lot of money or are too scared to trade it, or they just don't understand it. And if that's you, that's the point I have made this video, and I think it will be a really good help, because at the end of the day, gold trades like other things, but it just moves a bit different. And if you understand and have the right education on how to trade gold, you can use its huge volatility to your advantage to catch some extra pips. So with that being said, let's get straight into this video. So the first biggest mistake I see people make is they think that to trade gold you have to trade it differently than you trade euro, dollar, GBP, JPY, but that's not the case. Technical analysis and you marking up your charts applies the same to the whole spectrum, right? I have on my YouTube channel, I have a market structure video which should be popping up somewhere there. You guys can watch that onto how to mark up the charts, and it's the same on how you mark up gold, right? So keep that in mind, and these markups, it's exactly the same. And I just want to remind you that in the description below there is a Telegram channel and you can join for free, and every day I send up my markups of gold to help you guys look at some levels to look for buys and sells and give you a brief overview of what direction. So please join, it's free. Send your charts, ask for feedback. It's a great community, so please do that. And also, if you are liking this video, don't forget to like and subscribe. It helps grow the channel. Have to get all that out of the way so we can get concentrated. So let's get into point number 2. So point number 2 with gold is, unless you've seen many cycles of gold, right? You've seen gold over many years. Gold is a seasonal asset, right? And I believe that it is a seasonal asset, and you'll find certain months, certain periods of time, it's not tradable. When gold was trading at all-time highs, I didn't really, people don't want to touch that because we don't have past data to go off. It's very hard to predict where's the next place it's gonna sell, or unless it has a correction and you can buy back up the correction looking at the macro trend, which have been bullish. But what you typically want to do with gold is you want to trade the trend, and how you do that is you go to the higher time frame. So if we would start on the daily, right, we're gonna take, this is the most recent date when I made this video, okay, and we're gonna look at the daily time frame and we're gonna see, okay, what is the trend at the current moment, right? And we're gonna do an analysis. So obviously you can see that the trend started to flip as soon as we got above, you can argue above this high, but I would say most likely here, right? So as soon as we got above this pivot here on the daily, the trend flipped back to bullish after coming from a bearish trend, right? So after the trend was flipped bullish here, we can see we came up, we filled some of this range to the left, right? So as soon as we saw this closure above, we could say, all right, look, we have this range here of no really resistance or support formed in this range, and it's a clean area, so high chance we should push up into that area. And we did get that push up before at the top of the range here. If I bring this line back up here and you guys turn your attention, you can see at this resistance here, what happens? Price makes a reaction, right? And this is why you have to trade with the trend. So if you were, as soon as we saw that price closed above this area here, right, and the trend was bullish, looking for price to continue up, at this point on the lower time frames, you guys should be looking for buys, everyday buys, and catching buys. You would have been with the trend and you could have caught all of this volatility towards the upside, right, before reaching where your target. And what's your target? Well, it's the last significant resistance, right, which is back up there. And guess what? It hits that resistance and you see a reaction. That's your reaction, right? So at this point you want to wait and see what the market is going to do. So obviously, then we can start analyzing on the lower time frames and so forth. But that's how you want to, but when it's ranging, so let's go see if we can find a range. So take something like this. This was on March 22nd. You guys are absolutely going to get hammered if you're trying to trade gold in a range without knowing really what you're doing. We're on a 4-hour time frame here. And if you're trying to catch, all right, so this is over, a good week. I mean, we're more than a week, to be honest. We're looking at 15th of March till the 29th of March, right? So yeah, we're looking at, probably 2 weeks here or something. And if you're looking at this and you're trying to trade between in this, you're gonna get hammered. And this is the biggest thing, is I'm telling you, with gold you have to trade with the trend. Not try, you have to, okay, because that's what's gonna keep you safe. Not safe, but it's gonna be a better thing unless you're very, very experienced. If you're jumping on the 5 minute trying to catch all these wicks here, you're absolutely gonna get hammered, and you're gonna find yourself not understanding the directional bias, right? You're gonna see this, you're gonna get into sells, it's gonna come back in the range, and then you're gonna be like, what's going on? You know, it broke the range, it should continue down to this support here. Yeah, but understand that we are in this ugly range here, and on the higher time frames, that this is a range and this is not ideal to trade in. So that is, you know, another point of trading gold is do not try to trade gold on ranges. And you know, when coming, there's a lot more advanced techniques as to using lower time frames on gold, but stick to the higher time frame analysis. So point number 3 is when you do find a trade, so let's take it for example here. All right, we can see we have a resistance here and a support here, and remember on the daily time frame we were what? We were bullish, yeah? And this was from our analysis. Obviously here we have this clean area here to fill. 15-minute will even look even cleaner here, so you can see that like so. All right, and you can see how you would have never got. So what we want to look for, and I'll show you how you could have got the trade on this, is if you want to be safer with gold, taking an impulse entry above this area here, unless you're very advanced and understand how to use the 5-minute, understand how structure works on the 5-minute, when you're starting to flip this type of entries up here, when you start understanding that, that's more advanced, we won't cover in this video. You know, when you start seeing this type of stuff, that's how you're going to catch these moves. But otherwise, what you do want to wait for is you wanted to wait for a closure, and obviously you didn't get a closure, and this is what you guys probably, you start FOMOing, you go buy here or buy here, and then you get, you know, you get a nice correction here, and you know how volatile gold is in terms of pips. So what you do want to look for is when a move like this, you want to look for support creation, right? So a support creation, and you want to be in and out with gold quick, right? So we can see that obviously we pushed up here, price found a resistance, it came down, made a support. Here's your trade, right? You could have seen that here's your support. As soon as this wick broke, right, you take the trade up to the top of the range. Now you must be thinking that's a very small trade. Well, no, it's not. If you were to use, you know, 15 pip stop for a 17 pip target, which was hit, right? So that's perfect trade, yeah? That's how you bank, that's how you do it. And that's the key of simple price action, is you just trade it on the same as how you trade gold, yeah? And your stop losses on gold, they can be more aggressive, right? And that's going to bring me into the last point of why of all of you that you lose is because of this. So a lot of you lose on gold because I see you using huge, or wrong way around, huge, you know, stop losses, something like this, 70 pip stop loss, and then you put your targets, you know, somewhere up there. Well, you know, that is very, you could trade gold like this, yeah, it is definitely a profitable method, but you know, for me, gold is moving very fast. I want to be in and out, done and dusted with gold. I don't want to be holding drawdown. And you know, gold in a minute can switch. I mean, if you were looking, I see a lot of people would have done this, right? Watch, they would have seen, oh, resistance at this area, this is an order block, warning, we are gonna come down. And what are they gonna do? They're gonna put a stop loss like this, okay, and they're gonna go short position here, and they're gonna target, where would you target? Well, obviously you would target the bottom of the range, something like that, right? And your entry would be, you know, something like this, okay, and you would come down like so, and you would say, oh, this is a great trade, 30 pip stop loss, right? 30 pip. Remember our trade up here that we're in and out fast was how much pip? Was only a 15 pip, but I wouldn't have taken that trade up there because of no bottom wick, just by the way. But yeah, look at this, guys. Your stop loss would have been above the wicks here like so, and you would have left your trade, you know, and it would have been great, and you know, hopefully you would have moved to stop break even, and you know what gold does? Boom, hammered straight to your stop. Your trade doesn't, you know, wasn't valid because you're holding it too long, and also you're going against the trend. Don't try to do that. Just trade with the trend. Trend was bullish. Why are you looking for sells, you know? And this is the biggest reason, is you guys have to make sure that when you're using, you do put a stop loss. Don't hold drawdown. Something like this. Let's say that this candle did have a bottom wick. All right. That's the only reason I would have taken it, is if it did had a bottom wick, yeah? So we put the candle something like this, all right, and we can put this back up to somewhere here like that, right? 16 pip stop. Here's your stop at the bottom of the candle. Yeah, we would have seen it something like this. So let's go on the, you know, the rewind tool like so, and that's how it would have looked. We would have had this massive move, and let's say this did have a bottom wick here, right? So let's draw a little bottom wick, all right, something like that. That's your bottom wick. So now what happens is, right, is that we can see and we're gonna target probably just the top of this range here. Nice, you know, 1 hour trade. And what we can really do, you know, we caught 14 pips here, and it's fine to have a little bit of a negative, because what we would have done is we would have moved our stop loss to break even relatively quickly. Yeah, and we need to scale in somewhere here, right? So we saw this candle open, the wick was broken. You can see here's our stop, 15 pip stop for 15 pip target. And what ends up happening? Well, you can, if we rewind, you can see that, you know, it broke and boom, it hit our take profit. But look at our stop, very tight. We're either wrong or we're right in this trade. Yeah, and as soon as it probably came up to this candle here, you know, to this, you know, probably about the 7 to 8 pip mark, so probably somewhere around, yeah, about the 9 pip mark, your stop loss goes break even. You know, it's okay in the beginning with gold to be aggressive, and that brings me on to my other point, is that on gold, guys, don't be trading the same lots as you normally trade, because the ranges are bigger. Gold moves in a bigger area, right? We could see that this is a 15 pip stop, which is luxury on gold, but normally you have like a 20 pip stop. So calculate and use risk management, guys. Risk only 1 to 2%, and make sure to do that. If your account is not big enough to trade gold, then trade gold on a demo. Work on your you know, skills, grow your account, and then move and start trading gold. There's no rush to trade gold. No one is stopping, you know, you don't have to trade gold to be a good trader. You know, you don't profits, you know, don't worry about profits. Concentrate on your trading, become consistent, and the profits will come later. All right, so I just want to make this video, you know, if your account's not big enough to trade gold, grow it, then start trading gold, and during that time trade gold on a demo account. Trust me, you'll see how much benefits there are. And if you are on a live account and want to start trading gold, I highly recommend that first you actually do trade gold on a demo account, right? So you should, you know, have some practice, do some back testing. It's very, very important. Have some simulation sessions on there, and keep your stop losses in place. If your stop loss is 20 pips and your risk on that trade is $100, right, then you should be using a half lot. Use half lots, you know, make sure to have your risk management in place. Watch how the asset moves. Don't need to trade it every day. Don't try to catch every single move on gold. If you miss out on the move, don't get FOMO like here. Wait for support creation, right? Don't be stupid. Look for ranges to break, wait for support creation, and then take the trade back up after that support creation, because that's just another confirmation for price to continue up, right? If you are lucky enough to get a nice closure above the range, you know, if this candle was to close, then catch the move up, yeah, great, you know. But understand that, you know, gold is very fast moving, and you want to be in and you want to be out. Apart from that, you know, that's pretty much what I would advise. You know, there's a lot more to it, and I just wanted to keep this a nice quick short video, just something, you know, to just for people to bounce off. I do have a simulation session with the Telegram that I'm doing for free, so if you guys are interested in joining the Telegram, it is link in the description, and I will go through a live session of trading gold, so that would be great. With that being said, take care, trade sharp. Thank you guys for watching, and until next time, peace.